All right. Hello, everyone. Welcome to Simplify, Configure, Scale, the Modern Mortgage POS Playbook. I'm Sabrina Park. Thank you for joining us for a conversation about where the mortgage industry is headed and how we're adapting to meet the moment. Today, we're talking about a major shift in mortgage tech. We're moving away from custom-built systems to configurable SaaS solutions. And it's a shift that we've seen lenders help them simplify operations, move faster, reduce complexity, and keep up with today's pace of change. But I will let our panelists dive into that. Today, we have two key voices behind this vision joining us. First, we have Tim Nguyen, BeSmartee CEO and co-founder, a true innovator and mortgage tech veteran who's been shaping the digital lending space since day one. And also David King, our COO and an enterprise SaaS leader who knows what it takes to scale technology and drive real results for financial institutions. So with that, I will hand it over to you, Tim. Thanks again, everyone, for joining us. We will be taking questions at the end of the webinar, so please stick around. Thank you.
Thank you, Sabrina. Appreciate the introductions. Well, first and foremost, welcome everybody who is joining us live. We know it's a busy day. It's almost end of the month, so we appreciate you taking the time. And David, I'm so excited to have David on as well because this is actually, David, the first time we've done a
It is.
webinar together, right?
Correct.
As you can imagine, we're all over the internal BeSmartee company meetings and so forth. But this is the first time we've done it live, so super excited for that. Well, let's go ahead and kick it off. One thing I remember writing a article a couple of years ago, right during the post-pandemic boom that I call it, and people were, lenders were losing money on every closed loans. Lenders were going out of business, despite having such a great 2.5 years, preceding that moment. And it really got me thinking about, gosh, what's wrong with the cost model? And I think 2 years, fast forward about 2.5 years now, it's pretty clear. And one of the things that, what we want to do and help the industry overall, really introduce a model that's not uncommon in other industries, but I would say uncommon in mortgage. Things are moving fast. Vendors need to move fast. Business moves fast. Technology needs to move fast. We all know in this space, right? You have good years, you have bad years. The trick, in my opinion, is to really use the good years as a launch pad to make damage from bad years. Then you have another good year, and your impact and your scalability is much better there. David, do you want to add anything to this?
Yeah, no, I mean, as someone who's now, got the whopping 2+ years under my belt in the mortgage industry, as an outsider, one of the things that's really been interesting to me to observe and learn is I'm a process guy. And so from a perspective of understanding how process and technology work hand in hand, and understanding that technology is there to enhance and to expand upon a process and make it better. I think one of the things that I have learned and seen, to kind of Tim's point, is how do you adapt in an environment where your processes need to change at times, where you have to be able to say, okay, what worked in the past doesn't work today. How am I evolving? What things can I take out of my process to simplify? And how do I not depend upon technology just to wrap around an existing process that, yay, I sped something up, but I just sped the wrong thing up. So how do I really think about doing things the right way and that marriage between technology and process? I think it's a big component that this industry is starting to really understand better.
Yeah, a consultant friend of mine, I think I shared with you this comment before. He said, a much smarter guy than I am. He said, you can't automate, or you shouldn't automate a bad process. You're just going to make the bad happen much more rapidly. And I really like the word here that was italicized for us here. Legacy tech was built for a market that no longer exists. That really hit home to me, right? Because we always go back to the way we did business before. And a lot of organizations, especially and this might not be a surprise, we might get a chuckle out of it, is a term that I learned working in the mortgage business, BAU, business as usual. When we go in there, we're trying to transform a client's operations and the way they originate. Oftentimes, the participants will say, well, it's BAU, right? It's business as normal, business as usual. And so they accept that and they move forward, and we automate, or we let a old legacy way of doing things persist. And I think this is a really good conversation we're going to have. We're going to dig into some case studies, not using real names, of course, and really kind of get down to how a new model could help evolve and change your mortgage business entirely. Let's not just capture the next 3 to 5 years. Let's capture that and make sure that we're prepared well in advance for the downturn that's ultimately always going to come.
Great point. All right. So I'll start this one, Tim, because this is my favorite part of the world, right? So, I think the term over-engineering exists for a reason. And it's because of the fact that it's very easy for folks to get so wrapped up in how do I automate every little step? How do I make this thing supposedly faster and quicker? And again, we lose sight a lot of times of how complex we've now made the entire process. And so, right, as you know, Tim, our team has a saying, dumb it down for Dave. Hi, I'm Dave, right? And the person who can simplify and who can make something usable and make it understandable, right? That's actually got power and speed. Because when you overbuild, that means you're overtraining people. It takes longer ramp time to get people up to speed. It means that you've got opportunities for bigger breakage because you have all the different moving parts. Something's going to fall apart at different points. It takes more time to implement, right? All of these things that we think we're making faster by adding all the complexity in, we're actually doing the opposite. And we're making things take multiples of what they should take in the long run. And so, a lot of times I see organizations and businesses that are like, man, we've got this, huge, my favorite thing to do is to walk into a business. On the wall, they've got this huge, process flow chart that's got, all kinds of crazy boxes and this huge diagram. And look at how complex our thing is. And it's like,
Right.
yeah, no one can learn it or do it. So how do you condense that down? How do you make things simpler? And that's where configurable comes in, and knowing what are the key phases to configure versus what do you just do straight line every time? And I think it's a really interesting concept when you look at the tech stack in the mortgage space. It definitely at times is a little overbuilding, in my humble opinion.
It's one of my favorite quotes, and it's often attributed to Mark Twain. I don't know if it's really him. There's a lot of debate about it. But he said, I would have written a shorter letter if I had more time. Right. And that really hits home to me. And, it's one of the reasons David joined the company is we needed, leadership here. We needed a partner, but we really wanted someone who could see things differently. We had enough mortgage expertise. We had enough mortgage know-how. We wanted to inject new challenges right into the model. David, just to have a little fun here, 2 years into, a little over 2 years into the mortgage space, what are we doing that's crazy compared to other industries?
Yeah, it does boil down to a lot of times it's the tech stack. I've told you a couple of times, I feel like the industry is trying to use an atomic bomb to blow up a gnat. And I think a lot of times it's forgotten. At the end of the day, it is a manufacturing process, right? I mean, I'm a Six Sigma guy. I've never met a process I didn't want to change or love. And from that perspective, right, we tend to look at things not from that, what am I building? What is the widget I build at the end of the day? And at the end of the day, it's a document. It's a document for someone to sign and for someone to complete so that they can have a mortgage, a purchase, a refi, right? Some type of loan that they're achieving. And so I think a lot of times we don't think about it from a perspective of how do I simplify that supply chain? How do I take my tech stack and make it as uncomplex as possible? And I think that you've got a lot of fragmentation in the space still from that standpoint. And I think that's maturity, right? And that's what we're talking about today is how is the industry is maturing? Does the technology and all of the vendors mature so that they can start to support a supply chain process in a more streamlined way, where you're not having so much complexity and so many hands in the pie and so many different places for, again, breakage. When you have that many pieces, you increase your opportunity for defect.
So
And that's a
sorry, David, go ahead.
yeah, no, it's great.
My mortgage history is going to come out, but I'm 45. I've been in mortgage since 20. And, one thing mortgage veterans will always say is, well, it's a really complex industry. There's a lot of data, there's a lot of personal information, there's a lot of risk, there's a lot of compliance. What do you say to that? Like, how do you balance that with running a business, which is already
Yeah.
hard enough?
No, it's a great comment, but the reality is you got to flip it on its head because it is a very complex industry and there are a lot of regulations. So that means you have to simplify things as much as you can. So you've got to, again, it starts with the process. And I see a lot of times people thinking the panacea of technology is just going to automate what I'm doing and it's going to make it so much better. Instead of sitting down and saying, how many touch points are there? What are the breakage points in my opportunity? What is technology even going to do for me in this particular area? What problem am I trying to solve as I go into a decision-making process? And so for me, it is a very complex space. You'll get no argument from me out of that, but it makes it even more important than to simplify. Because as a complex environment with a lot of regulation, the more, again, I'm gonna harp on this all day. The more touch points, the more opportunity for breakage, the more opportunity to miss some of those regulations and to make mistakes. So you really have to think, how do I simplify this down as much as humanly possible?
And it kind of goes back to what you said earlier, is the end product that a mortgage company produces really is a stack of documents, right? It's an
Yep.
asset you collateralize and you sell off and people trade and make, recurring income off of, right? Returns off of.
Yep.
And I love how you tie that back to looking at the process, really defining that goal, right? I think oftentimes what I see on the street in offices, I mean, I remember one time we had an implementation. It was like 5 of us and about 10 people from the LS, about 150 people from the lender's office. And it was a one big conference room, podium, right? Just big, big, big bank. And it's crazy how many hands are involved. It's crazy how complicated these processes is. And frankly, I feel for them because we have to design around it, right? We have to understand the way a credit report works and what permissible purposes and whatnot. But to see the variance between organization to organization is mind-boggling. And I think that's a great place to start, is to simplify these processes.
Yeah, no, I mean, one of the things that I first thought of when I got here, right, was I tried to look at it through, again, that Six Sigma mind I bring, and it's from the perspective of, again, lean manufacturing, right? When I look at just-in-time manufacturing, it affects this industry, right? I mean, you want to have the right number of applicants for the right number of loan officers, for the right number of underwriters, for the right number, right? You've got to know where you are in this process. And as much as you can try and turn it into a factory, right? I'll go back to the automobile for a moment, right? When you look at the invention of a factory line, right? And being able to have an assembly line and being able to put things together, right? If we are building at the end of the day a document, right? Just like someone builds a car. And so what are all the key steps? Again, back to that, what are the key configuration in each one of those steps? And how do you look at it to say, okay, I don't need to customize every single part, right? We're not building, and maybe you are. Some lenders or providers, maybe they are building custom automobiles, right? And yeah, those are made by hand. It takes more time. It takes higher skill. It takes a lot of things to get to that level. But if you're just trying to build the average car and you're just trying to get as many of those through as you possibly can at the right volume, at the right rate, you got to think about it from that process flow standpoint, to your point. So yeah, I mean, I think that that's the one piece to the industry that I've kind of seen where I think that it's so complicated turns into, I have to almost make everything else as complicated as it is, needs to kind of flip and say, how do I really simplify it actually at the end of the day to make it safe?
Awesome. Sabrina, I think we can move to the next.
Yeah. So, Tim, I don't know if you want to talk. The one thing I want to hit on this slide, and then I'll let you go as the guru. But the one thing I did notice that is very interesting to me from a space is, TCO, right? Every industry I've ever come out of, total cost of ownership is very important, right? Because it's not just, okay, what's my average, my annual, payment for the, the solution. It's not just, hey, how much is this technology costing me to get the widget through the line? It's what's the upkeep? What's the training time? What's the cost of change when I do need to change my process? What are all the things involved when you really look at how much is this technology cost me? What's the cost of loss, right? If I don't have the right technology and I'm missing on some things. So for me, I've been kind of a little shocked that some of the industry hasn't focused in and honed in on the total cost of ownership. And that's where you move from custom to configurable, right? Because it just is the way it is. I mean, I hate to break the news. It cost, right? And one of the stats that I went out and researched that I thought maybe people on this session would understand is when you look at the cost to build what I know from my generation is track housing, right? It's got 5 models in the development and that's all you get, right? You're looking at 3 to 6 months to build it and you're looking at $150,000 to $300,000 house. When you're building a custom home, right, you're looking at 18 months, 15 to 18, and you're looking at anywhere from 600 to 2 million, on the low end to build a custom home. So that total cost, and then the ownership of the home is expensive, right? So thinking through that lens is really important as you're thinking about your technology in this environment.
Yeah.
And so
So
to me,
I live in a custom home, as you know,
yes.
and the builder was a commercial guy. He owned a bunch of commercial retail locations across the country, right? So we have solar. I inherited the solar. I love it. Never thought I would get it, but glad I have it. So when we had issues with the solar panels, I just thought, you call some random solar installer that can come and fix it. Well, he put commercial solar panels into a residential home. So the vendor was all the way in Germany and they didn't have much of a presence here. So getting it repaired was just so tough. And that's the way I look at custom build. The engineer is no longer here, that vendor is no longer here. Someone else needs to crack it open. They don't quite get it. Takes them more time to understand it and resolve the issue. So, the total cost of ownership, I really like starting there. But before I get into that, because I feel really passionate about the cost, and I want to lower the cost to all mortgage lenders in the country. It should not be as costly as it is today. So but I want to talk about SaaS for a second, right?
Yeah.
If you go back pre-SaaS, I think the 80s and earlier, if you were an organization, you wanted software, you could, go to, I think it was Crazy Egg, I think it was, right? And go buy the big package and, CD-ROMs, the flop disk, install it. And that was kind of out of the box software, right? It couldn't update. It was difficult to update when you needed to update, and you have to keep on buying it every year to get the new updates. It was costly, right? And then the other way to build business software was to hire a team. It was really expensive. The infrastructure, the planning, the product design, the database, the engineers, the QA, the deployment, the maintenance, it's really, really expensive. Early in school, I think it was Microsoft or Dell. They were trying to recruit kids from college. And one of their slides that really stood out to me was the cost to build software, to deliver software. Most of it wasn't in the actual building of it. Most of it was in the maintenance of it. And that really kind of hit home to me. And I only bring that up because SaaS is supposed to change all that, but we're not letting it change all that because everybody wants custom, 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 custom. Right? SaaS is powerful because software is so expensive to deliver and maintain. It takes a lot of clients to pay for all that. But the benefit, right? So that means your cost should be lower in comparatively, and often it is, even today's environment. But then you also get the benefit of everyone's best practices, right? You can't look into 200 other clients, but the software vendor can. And as they introduce new features and they start gathering all this intel, you become the beneficiary of it, right? But unfortunately, we see that the total cost of ownership is increasing. Like I want the SaaS, I want it to deploy quickly. I want to do things no code. I want it to be flexible and move quickly. Oh, but by the way, I have a lot of custom requirements. It's really too kind of, it's really a rock and a hard place at the end of the day.
Yeah,
So
no, I mean, you hit on a great point that is so powerful to me. And that is from a perspective of as you look at creating configurable software, right? You're getting the benefit of all of the brain power of the multiple lenders that are in your area that are doing this. We're looking across all the clients, and we're be able to deploy things in a faster fashion too. Because back to your maintenance, it's not just the cost of maintenance, it's the cost of change. Because being able to write new code against that custom code, maintaining all that, it's very challenging to go fast. Again, I call it go slow to go fast, right? And you've got to really think through your design and how you're doing things versus a lot of times, to your point, folks think they're thinking configurable, but in reality, they're thinking very custom. And I'd like to kind of dive into that from a perspective. There's got to be a reason, right? I mean, I think people want to be successful, but I think also at the same time, I think people sometimes, again, get locked in on maybe the wrong things, maybe not understanding what are the priorities that they should be focused on to deliver the best experience for their, member, their borrower, right? Their consumer. How do they think through all of the key areas of the process to be able to say, where do I want to stand out? What are the things that are critical to me? What do I think that are going to help move move the needle on things that matter, right? At the end of the day, last I checked, it's going to be, how do I get more through the funnel and how do I increase my revenues and my value, right? How do I do it at a lower cost, more money? And so I think sometimes I see when I'm in conversations with certain, lenders and folks, they tend to get locked around some of the complexities as you've talked about versus some of the outcomes and thinking through those pieces and saying, do I really need that one custom thing that I think is the end all be all? At the end of the day, you probably don't.
You bring up the word revenue that really hits home to me. What I find is often after a boom, lenders are so anxious, I guess is maybe the word, hunting for new revenue streams, right? And I'm curious to see what everyone in the audience experienced. But what we saw on the receiving end was, hey, I got to find more top line revenue. Home equity, there's a lot of equity locked up in people's homes. Home equity is going to be the way to go in a rising rate environment. Or non-QM is going to be the way to go, right? And these people never did home equity before. They never did non-QM. So they're in a rush to do it, only to realize after paying way too much money, spending too much time, and learning like, well, non-QM, you have to educate the marketplace really well. Home equity, the revenue model just doesn't always work, right? Yes, there's an argument to be made that it allows originators to make revenue, right? So if that's their goal, then okay, right? But is it really going to drive bottom line profits? Probably not. And the reason why I mention this is you rush to this, you spend the time and money to it, and then when the market turns, it takes a back seat. And you look back, you're like, gosh, a lot of that money and time and efforts went into something that's, 5% of my revenue or 5% of my profits. I could have used that time and energy somewhere else, such as get ready for the next, or reduce my cost to close, right, by $200 a loan, et cetera, et cetera.
Yeah, I mean, there's a couple key phases in the process, and that's where I think the configuration really, again, this configurable SaaS versus custom plays a big role, right? The borrower experience, right? There's configurations you're making in there. It doesn't need to be completely custom, right? When you're looking at the LO's experience, right? It doesn't need to be custom. It needs to be configurable based on the best practice process. And so, because all you're really trying to do is get more people through the funnel successfully that are going to be successful, make it easier on your LOs to do what they need to do so you can close more at the end of the day. And I think if you're focused on that and understanding the process to drive those things, you start to realize it doesn't need to be as custom as you think.
David, what would you say to mortgage people that says, well, but we're unique, right? This customization, the configuration doesn't work. Like, here's how we do it. It's just different.
Yeah, I think that what I have done and has worked and we'll talk about a couple of successful folks, is you have to buy into change management, right? Here we go. Mind reader. So to that degree, right, when you think of what works, right, it's the people that buy in on change management, right? They understand that if you're just looking to automate what you have today, first off, I think you probably already have a POS. I don't know too many people out there. I mean, we're in an environment now where most folks have some form of POS at this point. So what I find interesting is when someone's looking because for whatever reason, cost, it's too custom, whatever the reasoning being, when you're looking at that adoption of some new technology, you have to come to that with a mindset of some of the things I do are probably not working because how the technology today is working, right? So it's a gap between the technology and the process. And a lot of times people just want to throw out the technology and blame it there versus looking at the process.
Mm-hmm.
And so the folks that are successful, the ones that really come in and have done great, got super conversion rates, they've been clients for a while, right? That are doing good things and are growing. Those come in with the mindset that they understand both sides probably weren't working where they were, and they're going to come in and get the best of both worlds. So they sit down with us and they talk about what is the process that your technology drives. What is the best practice that you see with how to leverage the technology as you have designed it? Because we spend a lot of time, and you get to be the we in this, Tim, who, this organization has spoken with hundreds and thousands of LOs and lenders and people about what works, what doesn't work, to say, okay, how do we create technology that allows that person to have a process to be successful? And so you really see that it's the people who, that are open to that change that are the ones that win. If you come in thinking that you're going to do the same thing and this new technology is just going to be magic, you're probably going to be disappointed, no matter who you go with.
It's interesting. There's every new lender call that I'm on, there's always something I've never heard before. I could have talked to 300 lenders the last 2 years, talked about their verification of asset process, and sure enough, in the next call, someone's doing it different, right? Yeah, the other 300 are doing it one way. So I love that as an opportunity to go in there and use what we see across the board to really help lenders understand what the market's doing, what the best practices may be. I love that as an opportunity. So
Yeah,
on this slide, I'd love to, it's a good segue to, if you don't mind, I'd love to take lender B.
of course, feel free.
So these are real use cases. Obviously, we're not going to share any names. So lender B is a very recognized bank, very large, not a huge originator, but very large, just from a assets under management, right, deposits perspective, global presence. So the list goes on and on. They wanted a way to keep the loan officers out of the loan origination system. And what started off as a, hey, let's just stick to base and just get this thing live in about 9 months, ended up being a 2.5 years project I was very intimately involved in. And while the end result was exactly what they wanted, they didn't realize the upkeep in the inability to pivot when needed. All right, so they got what they wanted. The loan officers are living inside the POS. They're much more nimble. Is automating things. Is doing things that, frankly, I've never seen any other POS vendor provide, or even any lender provide, even if they built it themselves. So super proud of that. However, now we have to maintain it. Now we have to expand it. Now we have to solve different issues because the market evolves. So this is a particular, use case where money was really no object, right? They had tons of people and they got what they want, but they're not necessarily happy because they felt like the prior team over-engineered it. They did too much. And this is an opportunity, I call this out because, how many people are like agreeing to this, right? Whether it's that big or that big, it's big relative to your size, right? It's, what should have been done, and I'm gonna let you explain this, is how could we have taken that experience, right, and gave them lender A, right? A equally large lender, not as well known from a brand, but it's much more cost effective. It's easier to maintain, it's easier to pivot, it's easier to adjust with the market. I just bought a couple branches, great. Let's take care of that. Whereas that lender B It was impossible because there's so many layers of branches and divisions and reporting and so forth that need not exist, that unfortunately does exist, that made just onboarding of, two branches of 40 people, you know, a multi-week task. Versus in lender A's case, that could have been accomplished in a couple hours. So David, love to get your
Yeah.
perspective on lender A's success and,
Yeah,
you
no, I mean
know,
it's such a great, scenario that you kind of just brought up. It's interesting to me. I want to share quickly one though that I shared with you the other day that was a new one for me, where we were talking to a lender who literally has two LOSs because they felt for certain type of loan, they wanted to have a certain LOS, and then for a different type of loan, they wanted a different LOS. And it was one of those moments where I was just floored. I was like, do you realize the level of effort and training and complexity that you are introducing into your environment for someone to try and learn to do that?
and I
Uh,
remember asking you, did they inherit the second
and
LS?
they did not.
No.
And so it was a really, really interesting study for me to understand the psyche of we want best practice for, in thinking and really it was a great in their mind, a great reasoning, right? We want best of what we can get, best of class for this, without thinking again about the complexities you're introducing, right? So to your point, lender, the lender that we're talking about is lender A. They came in with a very clear outcome. They were thinking results. They were thinking about what they were looking to achieve as an end state versus a feature function fest to try and say, I want everything automated that I can possibly do under the sun with every, thing you can think of. They said, what is the best way to achieve this amount of throughput, this level of effort from our LOs, this visibility for a borrower, right? Like understanding what the value was of the technology and understanding that their processes would need to change in order to leverage the technology. And so when you come in with a view of a result versus a view of I want to have every single possible feature function known to mankind. It really afforded them the ability to create a very simple process. And so, because of that, right, we all know that the LOs are the king of the jungle, right? I mean, that was one thing I learned very quickly. And so, in order to get LO adoption, if you try to hand them a piece of technology that they have to spend hours and hours to try and learn, that at the end of the day automates but makes their life more complicated,
Mhm.
what do you think the adoption rate's going to be?
Yeah,
Pretty
no,
low.
you did.
You bet. So lender A really worked with us and understood how to simplify things. We created a very simple training structure for them, and they were able to get adoption because they were able to show how it made their lives better, right? It focused on the result. Hey, you're going to get more loans that the applications are going to convert better. You're going to get the loan through the process faster and easier. You will have less touch points in the process. And so by doing that, they got great adoption rates. And when you start to see adoption rates like that, people then can share the knowledge. So you had people speaking a common language to one another, using the same tools together, versus if you don't have great adoption because it's so complex, your teammates can't even share information with one another about how they're doing best practices on things because they're following two different processes potentially
Mhm.
because one's using one type of technology, one's using another. So you don't even end up being able to create a true best practice with your organization. And so to me, that's the variable difference between A and B is coming in with that. How do I simplify versus I don't care how complex I make it as long as quote unquote it happens in one area. Um, and that was
Yeah,
it.
I love that because, I mean, as a business leader myself, I have to really be purposeful about focusing on the outcomes that we need as an organization. And when I don't do that, I naturally get into the weeds. Then you start over engineering things and you start, then I think I'd probably drive other people crazy because I'm just too far in the weeds. But when I focus on the outcome, I'm pretty happy at the end of the day, right? At the end of the period of time that it takes to do that. And that's one thing I would really encourage everyone is focus on the business outcomes, right? So often we get someone that says, "Hey, I need a feature that does X, Y, and Z." Cool, but why? Help us understand the business problem, the business need. How does that move your business forward? And sometimes there's a very good explanation for it, but the goal evolves. The goal is not I need feature X to do, A, B, and C. The goal is this is the real outcome I'm looking at. As long as I get the outcome, show me how to get the outcome. And that's what I'm ultimately paying for at the end.
Correct. Right. At the end of the day, every POS on earth needs to be able to take an application, run credit, look at some pricing, have a dashboard for someone to be able to see what's going on, and have an LO be able to do what they need to do to get the loan processed. Right. Those are the must-haves. Now, what you look at, we're not saying one size fits all, so you get configurable, right? But you got to be very, very prescriptive in that. And you got to say, what are the key stages in the loan manufacturing process? And what are the key configurations that I need? Don't turn it into the Cheesecake Factory, right? We don't need a 50-page menu to decide that you're not hungry because you sat there and read it for so long, right? Like, how do you get very prescriptive and very smart about this stage? I need these 3 things that I'm able to change if I need to. I need these 2 things at this phase. A lot of times, to your point, oh, I have to change this one thing at this one particular. How many times does that come along? Once out of every 4,000 loans. Do you really have to have that? Or should you have exception processes for certain things that are outside of the norm? Because you want to track those things that are outside of the norm because they don't happen every day. So a lot of times people can actually leverage technology as a problem because they start to try and do things that they don't do very often and people lose sight of them. So there's a reason sometimes you want exception processing. And that's because they're one-offs and you want to make sure you get those particular things right. So it's an interesting lens that sometimes you have to help people work through to understand some of the benefits.
Awesome. Okay, on to the next here. David, you want to wrap things up for us?
Yeah, so one of the things that we have been, I personally have been very focused on since joining the BeSmartee team, is really kind of how do we do what I've done in the other industries I've been in my past lives, and that comes down to how do we make the people's lives better that use our technology, right? At the end of the day, the value of our technology is to make a borrower's experience the best that it can be. It is to make the LO more efficient, effective, and as happy as they can be. And so from that perspective, if you look at, the industry, the complexities, all these different pieces, in order to do that, and at the same time, manage all those complexities Tim's talked about, we've really focused on automation in a configurable fashion. And so to that, working with our clients on processes, building out these new technologies that, we've rolled out recently, our Bright Connect Beam solutions, right? We look at the world through, what is your delivery model, right? And what loan types are you most keen to process, right? And so from that perspective, at the end of the day, how do we get up faster? Right? Because if you're building custom software, that means devs in there somewhere. So you might as well count on a 3 to 6 month implementation process. How do we cut that down to weeks? How do you make sure that from getting people operationally live faster, less training, right? There's not as complex training going on. So really, if we can do these things on the front end, it allows you faster to market, faster to get the value out of the new technology, which means you got a competitive edge at the end of the day because you've married process technology in the most efficient way to drive value. Because at the end of the day, that's what you're looking for.
Awesome. Sabrina, if we can go to the last slide. I just want to tag on to what David said. Ditto to everything he said. If you're in a period, a phase right now, whether you have a POS or not, regardless of what your problems are, I encourage you to reach out to sales at BeSmartee. We have really smart folks here, great folks. You'll enjoy talking to them. Share with us, what's bugging you? What's keeping you up at night? and hopefully what we can do is kind of redirect you towards what the true business problem is and what the potential solutions are. And you may learn that, you may not need a switch to POS. I love it if you do, but it may not be a necessity. Or if you do end up switching a POS, I think what you expected might be very different. But at the end of the day, right, you're going to get the business outcome you're looking for, and that's what moves the business forward. David, appreciate you taking the time. This is fun.
Yeah. No,
Learn
that's
again.
awesome, Tim. Appreciate the conversation.
All right. Thank you both. That was great. I have a few questions here. I'm gonna go through them. Let's see. The first one here is how configurable is Bright? Do you not need developers? And what is no code configuration?
Yeah, so I'll take first stab at this, Tim. You can feel free to chime in. But when you think about what we're talking about, it's the ability to configure steps in your process. Again, what we've done with Bright is say, okay, what are the key phases in the manufacturing of a loan process? And so, when you're looking at things like, credit, you're looking at things like, pricing. So depending upon your model, right? Are you someone who is showing, you let the consumer pick the pricing, you display it in the process, they go through, they choose their own, pricing they're looking at and off they run. Or it can be configurable and turned off where they don't see the pricing. Your LO is going to be able to run pricing and then get on the phone and share it and convey that to them in a call while you're having a conversation with them. So again, depending on your model, allowing you the ability to do certain actions and certain activities, pricing being an example, where hey, it's fitting, it's what your model is and what you're trying to achieve. Well, we can configure our solution to allow you to do that.
Perfect. Another question here. How does Bright help cut training time for loan officers? We have been struggling with adoption.
Yeah, I mean, Tim, we hit.
Yeah. It's, adoption's a interesting thing. I've seen clients adopt near 100%, like without any incentives. I've seen some struggle with incentives in the 20 to 30% range. Yeah. Working at home, kids want the jacuzzi turned on. Sorry about that. Where was I?
Adoption is a toughie.
Oh yeah. So, target adoption, I see hover around 65%. So an organization gets about 65% adoptions, closed loan share, right? It's a pretty good number, left up to its own natural course. I've seen incentives drive that up in general to about the 80-85%. Ultimately, adoption, it's just you need to know who your customer is. And unless you're consumer direct or traditional retail, right, distributed retail, adoption is, your client is the loan officer, right? They drive and they go out there, they find the realtor relationships, they find the deals. They are your customer, but then your borrower is also your customer. So I think the first is you look at it from that lens. Second is keep things simple. Simple, 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 simple. The POS that you buy might have 100 features. Let's narrow it down to the exact features that's most pertinent to your marketplace, to the way your originators do business. We'll have, we have different combinations, right, that'll fit based on what we've seen, and we could always modify that a little bit. But start simple, get the initial, set a North Star. We're looking to increase conversions from, 65% of, or 65% conversion for online apps to 80%. Great, let's start there. Let's check the one off. Let's celebrate that moment, and then go back to the originators, go back to process and say, hey, what else is a problem, right? What else do we need to solve? So that's how I would look at adoption. In terms of how we help adoption, it's the playbook, right? Again, we understand every business is a little bit different, but 99% of it, right? 95% of it even, it's all the same. So, be open to listening to the playbook, how other lenders are doing it. Use this as an opportunity to evolve, not to just replicate. And the last thing I'll say too is, we have a lot of originators that use the software. So with that said, I think you're going to get a lot of familiarity from using a platform like Bright.
Great. What makes your POS model different from other POS solutions today?
Yeah, I'll start, Tim. I'd love to have your feedback on this one, obviously with your experience. But for me, what I think is our big differentiator is again understanding process and technology. I think a lot of the POSs are still thinking very technology wise, and I know that sounds weird as a technology provider, but understanding how your process and technology intertwine and how they work together and how you can create the best experience based on that is really critical. Because again, you could have the greatest technology in the world. I'm not an iPhone guy. I'm an Android. I use a Samsung device. So I'm sure the iPhone is probably the greatest phone in history, but you put it in my hand and I would have no clue how to use it. So, right, great technology without the understanding of the process is not going to benefit anyone. So I think what a differentiator for us is that understanding of how to configure our solution to be able to work with the best practice process to drive the outcome people want.
Yeah, I'll add to it. I mean, I love David's take on that. He's looking at it from a very practical, rubber meets the road perspective. I look at, I'm a product guy. So from a product perspective, right? One thing I'm very proud of is after the pandemic boom, we had to really take a hard look at why we won, why we lost. And what I realized is we would win because of automation. People want automation to go to BeSmartee. If they wanted a mobile app, we would lose the deal most likely. If they wanted a beautiful consumer experience, we would probably lose the deal. So what we've done over the last 2.5 years or so is actually combine all three into one offering, right? Where you now have, that's our differentiator, where we have that mobile app for your purchase business and your referral partners. We have that beautiful consumer experience you can be proud of, having consumers step through and experience on a day-to-day basis. But the automation hasn't gone away. Right, so where we automate makes sense, and you're going to gain efficiencies from there. The last thing I'll say too about this topic is going back to the total cost of ownership. I kind of forgot to talk about that. I believe that the SaaS should get generally cheaper and cheaper, right? But we're not seeing that. We're seeing people do price drops because of the market. They wanted more revenue from vendors, right? Or vendors wanted more revenue, but now it's starting to go back up again. And some vendors out there, I won't mention any names, they keep on pushing it up despite how bad the market was, right? But as a whole, that's why you go with SaaS. The total cost of ownership decline as you originate more volume. Paying X dollars per closed loan, it's a straight line. It doesn't scale. Not all loans are profitable. Some loans, not all product types are possible or profitable, right? And usually, some people will put tiers. Oh, if I do this many loans, we lower the cost of close. Sure, but those tiers are often not met. So you never really gain the benefit of it. So part of what we differentiate too is our pricing model. It's a pure subscription-based model. So if you do really well, congratulations, you get the gain. We're not going to keep on taking a straight line, bite of the apple, so to speak.
All right, those are all the questions we have. Any final words?
Yeah, I appreciate everyone's time. This was a great opportunity. Thanks, Tim, for sharing the insights, and thanks to the participants. And again, a lot of opportunity in this space, and I think that we're going to see some great things continue over the next couple of years.
Ditto to what Dave said. Thank you, everybody.
Thank you.
Have a great day.